All right, this is about how we approach the markets, our style of analysis, and about you when you apply our analysis or you apply anybody's analysis to your own trading or investing. It's always about you taking ownership of your own trades, and then you will manage the risk properly without waiting for somebody else to tell you what needs to be done. So I think that's always important. And we always want you to consult with your trading advisor and your own trading plan, because we're not responsible for you and your trades, your results, whether they are negative or positive. So please do take a moment to read this. All right, analysis on the stock market. It's coming. But first, just take a quick look at this. Our top level 4 special trial for first-time subs and upgrades. All of this on this page included. I'm not going to read the whole thing to you. Take a look. There's so much here. The MCM, I'm going to show that to you in just a few minutes. You'll get an idea for that. But you get everything for level 4, including levels 3, 2, and 1. Just $99. You're going to get all of this and all of our proprietary indicators. Amazing, and it's non-recurring. It will not renew. So you're going to pay $99 once instead of $159. So you're going to have a big savings there. And then if you want to stay at a different level, you just let us know. And we're going to probably give you a special again to stay with us. So please do write to Matt at askSlim.com if you have any questions, or go to the top of the askSlim.com website. You see right over there where it says 37% off on level 4. Click there, you get some information, and there's a sign-up link for you there. Remember, it's $99 non-recurring. So amazing deal. We don't do this very often. You're going to get just a great look at everything that we offer. All right, stock market this week. Well, stock market chopped higher, and that's after last Friday's big drop on the trade war fears. Trump and Bessent were backpedaling on what Trump had said last Friday as he is getting with some tough talk from China, but then he wanted to calm the market. So he said, don't worry about China, it'll be fine. He also said President Xi just had a moment. Of course, that would be an insult to Xi. So Xi didn't react kindly and came out later with more threats. Bessent said, well, maybe it'll be another 90-day extension. Of course, because they want to say whatever they can say so they don't upset the markets. Because heaven forbid we should get the markets moving down sharply on Donald Trump's watch. Well, they wouldn't want that to happen. Powell came out and said the Federal Reserve is shrinking the balance of their, is nearing the end of shrinking their balance sheet, so that quantitative tightening program is probably coming to an end. Their balance sheet is now still bigger than pre-COVID, so you got to really take a message from that. What are they worried about? They don't want to shrink that balance sheet. Maybe in the next recession it'll be up to who knows what, massive trillions. So they're going to stop right now, and I'm taking a message from that they're reading into some weakness that we see in the markets. And you can also read into the fact that the bond market 10-year yields are now under 4%. First target was 3.87%, and that is a reason to consider trouble for the markets, because when the bond market goes down, it goes down for a reason, and usually stock market goes down when yields are going down. AI, well, the deals keep coming and keep lifting the sector. This week was Broadcom and OpenAI. They made a very big deal. And I'm reading a lot about this circular investing, where each of these companies is investing in the other one or making deals with the other one. So you have a bunch of companies pumping each other's earnings up all at the same time. And when that wheel stops, you know what will happen. But NVIDIA, they got a downgrade, and the stock went lower, and that's on AMD competition. And if the news on NVIDIA isn't good, then you got to really take a good look at AI overall. Banks strong to start the earnings period, but the bank stocks were mixed, and gold and silver soars to records. They're having on Thursday here a massive up day, but crypto has a feeble bounce, and that was after Friday's crash. Watch Slim's take. It's in this video. If you're just watching the information on the stock market, you missed a very good segment. So go back and watch that individual segment on Slim's Take, and I'm talking about Bitcoin there, and you're going to find it very interesting. First 4 days of this week, this is Thursday, the major index, they rebounded strongly. Now, they were very, very choppy this week, and they were up here a lot on Thursday and gave that up and then fell to the downside again. So they were up, S&Ps were up almost $40, and then they were down over $50, 50 points. And right now, as I'm doing this recording, they are down about 35, so they're getting a little bit weaker right now, but they're very, very choppy right now. And that means that instead of just buying the dips, they're selling the rips. And that is an important change in this market, which is very rotational right now. I'll talk to you about the rotation in a minute. For the week, S&P 500 and the Dow up over 1%. NASDAQ is still up over 2%. The Russell up over 3%. And that's, again, at about 1 p.m. Eastern Time here on Thursday, October 16th. So that's what was influencing the market this week. So now we're going to take a look at some charts. We'll look at the Russell, we'll look at the S&P 500, and the FEZ. The reason I have this mix going on right now was because the Russell has a very clear wave action, cyclical movement that we see in there. It has influenced the S&P 500, but the S&P 500 has been kind of much flatter in its wave movement and harder to analyze on a cyclical basis on the short-term charts. And the FEZ has an influence on them also, and that is, of course, the top-weighted European stock. So we're going to just speak to those as we look at this right now, and I'll show you our level 4 indicators on the MCM following that up. So let's switch now over as we look at the charts. We're going to start in the Russell. So the Russell is interesting because if you look here on the daily chart, the cyclical rhythms are almost perfect and readable, which is not what we're seeing on the S&P 500 or other charts. So I'm going to use that as a reference point. Now, here we are on the Russell on the weekly. Now, you see it had this one big engulfing day right over there, and then the market went up here and tried, to get at a significant new high. There would be a first target resistance level at 25.82, but it got up to 25.41 today and then had a pretty big failure as it turned down with the rest of the market. So what we're seeing here is not uncommon, actually, where you get a reversal that tries to get up above the level and fails. You can actually see it did that right over here, where it had a reversal right there, and then it got up and failed, and you had a big decline after that. Of course, this was the tariff trade war panic, and I don't expect anything like that. And you can see our projections right over here, where were this to continue on the downside, then there would be supports here at 23.92, and this is the important first support, because the first one's a minor support right there. That's from this cycle low to this peak, and then right over here is 23.54. I think it's pretty reasonable to expect that to get down to that 23.54 level sometime in coming weeks. For that to happen, it would have to turn negative. Now, you see here the reversal scout, even on this corrective period in here, it stayed positive. I mean, we've had a very positive market since back over here in April where the momentum turned positive. This is our reversal scout, which is a level 4 indicator, and extremely valuable. You can see where it turned over here, it really gave you a negative condition. You had a bounce, it turned over again, and then you had that slam. So this is still positive. And the intermediate readings that we're looking at are, they have not really given a lot of ground yet on the momentum conditions. So this period of risk right over here is in anticipation, because when you get into these periods, as you see right over here, you get the bigger declines. I mean, this decline right over here was 21.34 down to 19.30. So that was 200 points on the Russell. This one over here was from that peak at around 2,300 down to the cyclical low over here at 2065. So that was over 200 points, and you know this one was huge. So it would make sense to get a 200-point decline here from 2540 down to about 2340, which of course would take you right down to these levels during these next several weeks. Now this is the really beautiful cyclical wave action that we have here in the Russell on the daily, as you can see. Now this is an unusual condition where you get a positive cycle right over here that says you're going to keep going to the upside and make higher highs. It did, but then this low right over here equaled these lows over here. So you have these cyclical lows where it touched 1, 2, 3 times, and then you got this next upside move. So it points up to these levels of resistance up over here, 2552, 2581, if it continue to go up. If it starts to move down and breaks that 2393.85 level right over here, well, that would be really bad. Now you see these blue lines right over here. I believe that this cycle right over here, which has an ideal low around the early November, or this cycle over here, which is around the 3rd week of November, one of those will sync up with one of these arrows. That's why we have 2 of them there, because one of them is the earlier cycle on the weekly, one of them is the later cycle on the weekly. So I believe that right in here will be this pullback to satisfy this cycle decline right in there. Now remember that what we look at is average time periods and cycles, and that's why we show ranges of time in here where the troughs are likely to come. And so we're in this period where the weekly is due to turn over and correct, and the daily is still strong and positive. Note the slim ribbon in here. Note the slim ribbon PO was giving those strong upside signals. And note the option bias indicator is telling you to stay on the long side. All of these are 1, 2, 3 indicators there with the reversal scout are all level 4 indicators. So you can have those if you take our levels 4 special and then put them up on the Thinkorswim platform. So that's a look at the Russell. Now let's just stay on the daily chart here for a moment and look at the FEZ, which is the European stocks. And you'll see here FEZ actually is building this megaphone right there, and got to the top of that megaphone and then set up a positive cycle. So you could see that where that low came and it started to rally. That confirms the timing, really, when you look at the Russell, where it made the low here at the same time period 4 days ago, and that really says that that low is significant. So we'll keep that in mind when we look at the FEZ to see the same thing. And this cycle over here were to do as expected, where if it got somewhere up this level and then failed and then came down and broke that level right over there, that's right around 61.30, then that would be a breakdown. And I would assume this would come down sometime into November, which is the same alignment that we see on the Russell. Now, the important thing now is to see how does that line up on the S&P 500. Now, the S&P 500 turned positive way back over here in April, and you see the slim ribbon and continuing to the upside right out over here. So that's, let me just get this up here. So that's a reflection of this big upside move, and there's been just a big rotation in there. The investors, traders, they always want to buy something. I mean, that's really what we see, is that they're buying all of these dips, and they look for a strong segment of the market, and if it's strong, well, they move into those. And each day, we seem to get this buying coming in some segment of the market. Now, because of that rotation, and you can see on the bottom here, I have the Russell right over here, and then I have the FEZ right over there, and then I have the S&P 500 cycles right over there. The best I could see where they're making their troughs, and you could see all 3 of them came together right down into this time frame right there, and then you got that big down day. So I don't have the ability to tell you which of these key cycles are important. All I can see is that, well, there's been a downturn in momentum right over here, And you can see right there as the first time since going all the way back here to that April time period where it made the low is the first time the momentum turned neutral. You can see that has that blue down arrow right there telling you that the momentum conditions are changing. This is important. Now, you see this giant down day right over there. We have 4 days inside of this range of that one day. That's extremely rare. This looks a lot, if you're a candlestick student, what they call a falling three methods. And that is when you have a big down, you have several days inside of that body, and normally what it will do will turn down again. There's 2 scenarios to consider. I'm going to show you them. One is where it breaks above this high, and one of them is where it breaks this low. If it breaks this low right over there in the S&P 500, which is at 65.55, then it's all over. We're in this corrective period on the weekly chart, and I'll show you that in a second. So again, we're talking about scenarios here. If the momentum can restore itself and it starts to move up, and the buy the dippers and everybody who's talking about 7,500 on the S&P 500, which I think is insane, then we would get a move to the upside. And you still have to consider that we are in a period of risk on the weekly chart, and that I'll show you that in a moment. Then there's likely to be a decline. Here's what the positive scenario would look like right over there. You would get above this level at 67.64. It could run all the way up here to 69.32 at that next monthly Fibonacci extension. I don't think that's going to happen. I think that there's risk because we're in a period of risk, and I'll show you that in a second. I think the scenario is more likely to be this, but it has to prove itself, where it doesn't get anywhere. The falling three methods pattern works, and you come down and break that low, 65.50.78, and then complete this cycle out into that late November period. Now you can see in here the FEZ comes down into there, the Russell comes down into there, and the S&P 500 comes down into there. The reason that you have all of these different lengths in the cycles, and I know some people are going to look at that and say, yeah, those semicircles don't work. They don't mean anything. They mean a lot, especially under conditions like this, where you can see that they often have been fighting each other. That's what happens in rotational markets when the different indexes act differently. We've had the Russell extremely strong, up 3% this week, while the other indexes are not up as much. And that means money flowing into the smaller caps. So right now we still see that. The rotation is still on, and we're still inside this body right there. And we don't know for sure which direction it's going to go in. The reason that I believe that the highest probability is this correction is because of this weekly chart right over here. And again, I want you to look at the rhythms that are in here. And I want to thank our member, Mark VP, right there, who suggested that I looked at this 37 period cycle right over there, and that actually looks quite strong. You can see going all the way back how it lines up. So I put it on the chart here for a review. I love when our members send me stuff and I can review it and say, boy, you know, did I miss that? Is that important to look at? And I looked at this and I said, wow, that is really important. And that actually could point to the correction coming out towards the end of the year as we get into this period of risk right over here. Again, you have the reversal bar on the weekly. Look what happened here where you got the nesting right over there. That's where the market had a big decline. Here you had the nesting of all of them, and you had a big decline. Here where you had these intermediate and minor cycles nesting, you had some modest declines. So that's where we are right now, where, you know, you can get modest declines. I'm pointing down to the likelihood of this corrective period taking us down to this is 64.25, which is that minor support. This is that 23.6%. So this is down 4.1%. That's nothing. And this is down about 6.8%. And that's where that minor cycle support is, down about 8.2%. Any of that, I believe, is going to happen in these coming weeks, or maybe the next month and a half or 2 months. We're just in this period where it could be a shorter decline, more brief and more shallow, or even could be moving up again, breaking out, touching that level over there, and then coming down after that. Don't really know. It's going to have to prove itself, and it will prove itself right here by telling us which one of these, which direction it's going to take. So you can see here that, basically don't know yet. It's the market's going to have to tell us. But the breakdown in momentum right over here is sending a first message, and the reversal scout right over there is flattening out but hasn't turned down. That needs to turn down to really give us the important message. So there's a look at the weekly here on the left, and the daily on the right, and we're just waiting for the market to tell us. Breakout on the upside, breakdown on the downside. Is it going to go up and test that level and then have the corrective period, or is it just going to break down now and then go down? The market is showing a change of tone right now as it's having trouble holding rallies, and I think that I would give the risk rewards the highest probability to the downside based on what I'm seeing right over here on the timing. Still, the market has to prove it. Let's look at our market condition monitor for a little bit more information in here. Again, this is a level 3 or 4 indicator. The difference is that for level 4 members, they get the intraday right over there, and level 3 members don't have that intraday, but you get everything else that's in here. Let's take a look right here at what we're looking at on these indexes on the short term. Look what's happened in here. So we were so bullish for many, many weeks, and we were saying that market's bullish, market's going up. But now things have changed. Only the Russell is still showing bullish. We have neutral readings right now, and Ari did office hours and talked about the neutral conditions, and I just showed you the range and the slight downward turn in the momentum on the daily charts, the short-term charts. So that's why we're getting this change in here to neutral. And if this starts to turn negative, then I want to know. So you see that I have that right over there. It's gonna we have an application that you can put on your PC, and it will notify you when these things change. So fantastic application. Let's look at the intermediate right over here, and you could see that the intermediate has just, you see these arrows, this was neutral, just kind of wiggled back up to bullish. This just ticked down to bullish. So these are still bullish, but the Dow is not. The Dow is ticked down to neutral in here. So some of those cyclical, heavier weight stocks are giving more negative indicators. So there's changes going on the intermediate also, but it's not enough. It's not enough for us to see anything that is really turning negative. And I think that could happen pretty soon, but I'm jumping the gun. The rest of my team tends to be more neutral than I do when things are neutral. When we get into periods where I think we're in a period of risk, especially at that, the name that should never be said, that's valuations, especially where we are right now, corrections can be significant. So let's just look at the short term again, and we'll take a look at which stocks are the most bullish setups and which are the most bearish. This is setup conditions, and you can see in here the stocks that are the most bullish, and I'm just going to scroll this. By the way, on the right here is the change log, so it tells you when things are changing. And I'm just going to scroll, and you can see the ones that are the most bullish in there. Marvell had a big move. Intel, of course, all that government money pouring in there. Yeah, that's corporate welfare. Can't help but say that. Oracle's done great, done the deal with OpenAI. And then, of course, you have Valet, which is a materials stock. And take two. Solar, that's interesting. Johnson & Johnson doing good. Dell, those are all stocks that are still very bullish. You can see in there. I'll keep scrolling a little bit more. And now let's go back here and look for trade setup conditions that are very bearish. Sherwin-Williams, they're not, must be something on the housing and building industry. Comcast, Alaska Air, Philip Morris, Chewy. Wow, Chewy. I bought a lot of pet stuff from them. I don't have a pet. I do have a lot of wild birds I feed. T-Mobile, ServiceNow, Booking Holdings. What else are we looking at in here? Air Products. The ICE Exchange, that's interesting. Synopsys, there's Lulu. Bitcoin, there you are, BITO. Make sure you go watch that special I just did in this show earlier on Bitcoin. You're going to find it fascinating. MicroStrategy, the canary in the coal mine on Bitcoin. That just says investors don't believe in Bitcoin. All right, that's about all I'm going to show you right there. Do become a level 4 member and you'll be able to get the market condition monitor pro if you're a level 4 member. It's just fantastic. We use it all the time. Our analysts use it all the time. It's just great. If you're new to askSlim, get acquainted. Sign up for Snapshot Lite. It's free. You'll get Matt's info on the S&P 500 every single day. On YouTube, do subscribe to the channel. Click the notification bell and like this video. Give it a thumbs up. And X, follow us at askSlim. Any questions you have, write to Matt at askSlim.com.